Today we're talking about open door stock and what it is and what I think will happen with it in the future, at least in the short term, maybe long term. So first, open door. If you clicked on this, you probably know it's already an iBuyer. It's the last remaining iBuyer in the market. Its competitors Zillow, Redfin, they stopped being iBuyers because the market got really rough for it back in 2022, 2023. How open door makes money? They're gonna uh, give you a really convenient offer so the seller has a lot less effort to put in. They can just click a few buttons, sell their house for a lower offer, and then Open Door is going to try and flip that house for a profit. They're going to do some renovations, so there might be a seller's service fee, and the net proceeds from a sale to Open Door are often less than what a homeowner might make. But the big thing is convenience is Open Door's thing. So I made a video on this a few days ago, back on November 23rd, and then now November 23rd was a Sunday, so since then it's been up $1. We don't know what will happen in the future. Here's the 5-day max that we do see. It hit $35 back in 2021, and then it's at all-time lows back in June of this year, or under $1. It was at risk of being delisted from NASDAQ, but they were able to make a quick surge to get back into the comfortable zone. You see here Zillow, it's a competitor, they're at $75, so they are significantly bigger. Here's Open Door's website. It's obviously very professional because they are a real company, so makes sense, and it's pretty good. Now let's just look at their PE ratio. It's in the negatives, which means they're losing money right now. And when we look at their financials, we're going to see that same pattern. So it isn't looking too good in that sector. Of course, after hours, today is Sunday, so it's down a cent, not much. And it is a 7.34 billion market cap. Certainly not really small, but it's also not a huge company like Zillow. It's one of its competitors. And then the volume, this says average volume is 132 million. I don't think that's correct. I think it's a bit lower, but you could also check me on that. And as we see, the 52-week low was in June, 50 cents. So now let's look at these financials. If we go on quarterly first. So since last quarter, we see a huge decrease in total revenue every quarter. This was the most recent earnings call. A huge decrease. Gross profit is also going in the wrong direction. It's going down. Operating income and operating expense are all going in the wrong direction. So operating income's also decreasing. And yeah, so they missed on earnings, I think. We check on Robinhood. Actually, I think they might have hit on earnings. They've surpassed earnings. They've actually been beating earnings quite a while in terms of diluted per share, but their stock price isn't going huge. And so their financials aren't looking too good, especially if we go to annual. The revenue is going down. This is right now. So the revenue is certainly down. Gross profit is certainly down. So they're not profitable yet, which is definitely not a great thing, but now we're going to see why they might have a chance. They are also, this Open Door stock price is really intertwined with macroeconomics and the housing trend as a total. So the U.S. mortgage rates, so the housing market, the 30-year fixed mortgage rate has pierced 5% back in 2022, and right now it's around, I think, 6.5%. So it's certainly not good. I think this was exacerbated by COVID as well. And the median home price has also been increasing. Back in 2023, it was the second highest, and now 2025, I think it is an all-time high, or maybe it's like close to 2023 still, but it's been increasing a lot, so it's certainly not an easy market to get into. Now, the former CEO, Carrie Wheeler, she resigned from her CEO role of Open Door, and she sold 7 million shares worth around $35 million. Usually this means there's a lack of confidence from inside investors, but at least according to AI Overview and a couple of other sources, it's not much of a indicator of anything because she's resigned. So if Open Door surge, she might be trying to make some cash, and apparently there was something, she got an RSU grant in 2021, so covering taxes. So I don't think it's much of an indicator. Now, since she resigned, there's a new CEO, Kaz Nejatian. He was the former COO of Shopify, and he joined in September of 2019. Since then, certainly he had a huge impact. I'm not sure what happened here, but it certainly went back up. So certainly had success with Shopify. That doesn't mean he's going to do great with Open Door, but if we look at one sec. If we look at the tweet he made when he joined Open Door, it showed a lot of promise. So he left a very successful company on Shopify, and he joined Open Door because he really believed in the housing market and families, communities. He wants to rebuild the community, really. So that's why he focused in on the housing market, because he believes people who have houses are generally like putting down roots, make the world better. And he believes Open Door is a really important movement, and we are 1% done with this journey. So he certainly has a lot of plans, which we'll get into later. Yeah, his main plans include AI. So he's definitely very positive on this company, and with his success in Shopify, that is some good signs. Now, his goals to 10x the business, and how he's going to do this is first he created some warrants with the stock to help get some new stock investors, and let's see, he wants to include AI a bunch. So the main things he's done is increase the volume of homes bought and try and get them out quicker. And I'm just trying to find the quote. Yep, increased volume, nearly doubling the number of homes Open Door agrees to buy from mid-September to end of October. And now he aims to decrease the average time on market, which would increase profitability by lowering holding costs. So he's basically trying to make everything better. Buy more homes and get rid of them quicker. That way you turn more profit. So he wants to hold operating expenses steady as business ramps up volume. So if we go back here, operating expense right here certainly has been going down, and I'm pretty sure that's a good thing. So future plans, he said they want to be profitable by the end of 2026. So that'll be an important earnings call to look out for. It is a long way away. In third quarter, Open Door only sold 2,600 homes, 29% fewer than in the third quarter. It purchased 1,169, 1/3 of what it bought, and the bottom line, 80 base points worse than last year. So now that he's joined, we'll see what he does in this next earning calls. It's certainly ambitious plans, and yeah, so that's the main goals. He really just wants to increase the company's value as a whole. Now, there's another piece of positive news that I've been seeing. The housing market, which we just saw was really intertwined with the Open Door stock, Open Door kind of value, is set for a 2026 comeback, according to Lawrence Yun, chief economist at National Association of Realtors. I've been seeing this in a lot of news, so we can search him up. Yeah, so who is he? Okay, it doesn't tell us much, but I'm pretty sure this is a reputable thing. You can search it up on your own if you want. I think that's him. So he says forecast a 14% nationwide increase with home sales following 2025 stagnating levels. So that's certainly a good thing. That means the housing market as a whole is expected to rebound 14%. Here we see the chart. Existing home sales is what he's talking about, 14%. New home sales would also increase, so that's great. Median home price increasing is not great, but mortgage rate decreasing, which is what we saw back here, back to 6%, would be really helpful. Job gains and then unemployment rate. So this is showing a positive 2026, which does mean Open Door, if this is correct, would also look to be positive. Mortgage rates a slow drift downward. Biggest constraint for buyers, sitting around 7% at the beginning of the year, 6.24% this week. I think this was talked about last week. Mortgage rate should be better, Yun said. It's not going to be a big decline, but will be a modest decline. 6% in 2026 instead of the 6.7% this year, which is certainly great. But of course, he's just making a prediction. He doesn't actually know. Now, a couple of other things. Open Door does not have great analyst ratings. Recently, they went 3 months ago, they were underweight, 1 month underweight, and currently they are improved to a hold. This is because if we see this, like since August, really, since then, a few months ago, they've started to rebound. So the price targets are still really low. Currently, it's 770. The price targets are 160, 90 cents. There's one person saying $8. So the analysts are not high on this, and I don't think I'm too worried about that because if we look at what the analysts are, many of them haven't really talked about the stock recently. There's only three this month, and this is the only one I'm really looking at who said it's a sell. I can find the other website which had some more info on this, but even 11, 12, 11, 10, this is way before 11, 12, 11, 10. It's up here actually. Yeah, so you could still trust these sources, but really looking for recents, and this is the only one to sell. So I'm not taking analyst rating too much into consideration. But yeah, that's mostly the research I've done so far. And let me know what you guys think in the comments. And I'm probably gonna wait to just watch the stock